Welcome back. I'm Pratap here. Today is 3rd March 2025. In this video, apart from evaluating the performance of the high liquidity zones, we will also understand the power of pierced zone strategy. It's very, very important. NIFTY exhibited the power of our pierced zone strategy today. Okay. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. Some of you might be knowing the cost of the training is over 8,000 US dollars, but we are providing complete free training and all the training lessons are available at our NeoStock YouTube channel. At our channel homepage, click on the tab posts. Some of you might be seeing the tab community, so click on the community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You need to start our training from lesson 1.1 that is available at the bottom of the page. Scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one according to the training instructions I mentioned at our Telegram channel. I provided the link to our Telegram channel in this video description. So please join at our Telegram channel. At the top of the Telegram channel window, you can find pinned messages. Click on the pinned messages. You can find all the training instructions. So learn this course according to those training instructions, and if you follow all the instructions I mentioned, definitely you will become a very good independent trader in the coming months. So please make use of this opportunity. Okay, now let's get into our evaluation of the high liquidity zones, and also even before that, let us look into NIFTY. Maybe next 5-10 minutes, let's focus on NIFTY. See, whatever the analysis we did this analysis on 14th January 2025. 14th January 2025, I have analyzed NIFTY monthly demand zone. On that day, we have drawn all these fine-tuned zones. How can you find our 14th January demand zone? Analysis video. Go to our NeoStock home channel. Click on the videos. Scroll down until you find that video. See here we have 14th January 2025 NIFTY monthly demand zone analysis. Look into this video. You are seeing the fine-tuned zones here. They are all gone. After that, they gave trades for us. After that, inside, whatever the one you are seeing today. Initially, we have seen some drawn zones in this area. We got trades from those areas. And especially, this is the one gave nearly 400 points move. After that, finally, after violation of all these zones, after giving the trades, they violated. After the zone violation, today, price is entered into the pierced zone area. Which pierced zone? Monthly pierced zone. And also that is having zone confluence with the daily pierced zone. So that's why at the time we added the comment also here. Let me open the comment. In the text, not in this. Yeah, see here. This is 75 minutes demand zone within weekly or daily pierced zone. This is a newly created 75 minute zone. That everything we discussed in this video. We have analyzed our video based on the pierced zone strategies. You learned 3 strategies in pierced zone, that is lesson 28. And one of the strategies in that pierced zone strategies is new order flows inside the pierced zone. So inside that weekly pierced zone, a 75 minutes order flows are created. And what is that I explained in lesson 28? Pierced zone, when institutions create new order flows in the pierced zones, mostly those order flows are very, very strong. Those order flows are very strong. That means they are very powerful. They will give you good trades. Maybe intraday trades they will give you good trades, or short-term returns they will give you good trades. Because many people ignore those pierced zones because the zone is violated, they ignore. That is what institutions want. They don't want retail traders enter into their order flows. That's why I developed this new strategy, pierced zone strategy. First of all, pierced zone itself is a new concept I developed. Using that concept, I developed the strategy, pierced zone strategy, that you learned in lesson 28. First phase of the training course, I explained what is a pierced zone. Using that pierced zone, you learned strategies in lesson 28. Those who listened this monthly demand zone analysis video on 14th January, you all aware of these order flows. Because all these order flows I have drawn on 14th January. This is one important point. And another important point, recently also someone asked about this monthly zone analysis, NIFTY analysis. Even I replied to that person. I didn't remember the name, but in the comment section, I replied to that person. Still, the analysis we did on 14th January holds good. And also few days back, even I forwarded this video once again in our group. Why I forwarded? I want you people to listen the video. You know that market is falling down. It doesn't mean we have to get panic. When market is falling down means we are getting a lot of opportunities. When market is falling, who dare to go for long trades? It is supply demand zone traders. Dare to take the trades. I repeat the point again. It is supply demand zone traders dare to take long trades even when market is falling down. Why should we worry? Simple reason. Previously also I made this statement. Why should we worry? No need to worry. The reason? We know NIFTY is at monthly demand zone. Strong institutional buy orders will be there. They may not be giving you immediate swing trade opportunities. Definitely they will give you short-term trade opportunities or intraday trade opportunities. Until the entire supply is consumed. See, so many order flows institutions kept in this area. Even before that. All the order flows are consumed, but before they are consumed by the supply, those order flows gave us good short-term trades or good intraday trades. You got many trade opportunities, including today. Today it gave you close to 170 points move from the pierced zone. See, from this area, the fine-tuned area, see, prices reached, and from here, how it moved. Go to 5 minutes, you get better clarity. So this is what we have drawn on 14th January. We identified these order flows. We have a 15-minute zone. This is the 15-minute zone. Inside 15, we have this 5 minutes fine-tuned. This 15-minute zone is inside the 75-minute zone. This entire thing is 75. Where is the 75-minute zone? The 75-minute zone inside the weekly or daily pierced zone. It is there inside. See, this is the daily pierced zone. This entire thing. This daily PR set zone is the origin for this entire weekly PR set zone. Inside this weekly PR set zone, having daily origin, that area, a 75-minute zone is created. See, this 75-minute zone is created within the weekly area and also daily origin. See how exactly institutions played here. Understanding institutions play is very, very important. Then only you will become a good trader. Then only you make good money. That in that video, which video? This video. On 14th January, NIFTY monthly analysis video, while explaining this clearly, I told you. Now institutions are playing with us by creating a 75-minute zone inside the PR set zone. Because weekly zone is pierced, our daily zone is pierced, you don't focus on those zones. Because people believe that if a zone is pierced or violated, that's it. Okay, violated, okay, forget that. Pierced zone. That is the clue for us. That's why we developed that concept. That's why our software identifies pierced zones. That's why we analyzed this pierced zone. Because already you learned the concept in lesson 28. Earlier, why we did not talk before lesson 28 about pierced zone strategies? Because we haven't completed how to understand pierced zones with the help of the strategies I developed. But in lesson 28, whatever the strategies I developed, I shared with you guys. All these are all powerful concepts. Who will share powerful concepts with outside people? With free of cost. Nobody will do that. But I am doing. I am sharing every powerful concept I developed with you guys. Why? Because you will make money. If you make money, what is the advantage I get? At least you people go for my NeoStock software. To improve the efficiency of your trades, software reports always helps to improve your efficiency. Of course, I am doing with my own, what is the right word? My own selfishness is also there. I have to accept. But my selfishness is not destructive selfishness. It is a constructive selfishness. It's a win-win situation. You will win and I will win. Why I am sharing all these powerful concepts? If you learn, you make money. If you learn, you will also at least having some faith on NeoStock software. Okay, that is from my side point, from my thinking point of view. But for your side point of view, when you learn these powerful strategies, how best you have to make use, that you have to realize. That's why I analyzed this stock. Why I analyzed NIFTY monthly analysis. After this analysis, why I didn't analyze NIFTY again? Despite the fact many people asked me, please analyze NIFTY again. Why I am not analyzing, why I am telling refer only 14th January video. I know institutions how they behave. Until majority of their order flows are consumed, they will be playing within this monthly zone. By the time till that time they consume all the order flows, they create a lot of fear in our mind. What is it today? Every television channel, every YouTubers, what they are saying? NIFTY is crashing, NIFTY is crashing, market is crashing, Trump is saying so and so, some other person is saying so. That is the way people are talking. But that is not the reality. The reality is, we are in the monthly zone. There are so many institutional order flows are there. When institutions push the market up to the monthly zone, they want to make sure all their order flows should be executed. They will make sure. That's why some days they will push the market and again they move the market up. Again they push the market down. Next order flows will be executed. By the time all majority of their order flows are executed, supply will be completely consumed. Before the entire supply consumes, institutions will try to push the market up to trap areas. That is the area people, television channels and all the other people, they will be making noise. The market is going, you sell everything what you have. We get panic, we sell everything, and institutions consume everything what we have at the trap area, and finally from that area they will be started pushing the market up. That is what happened 1 year back. I think not 1 year, 1.5 years back. Same thing I talked 1.5 years back, but I know at the time we don't have this channel. We have a private friends group is there, some WhatsApp group. All the senior people were there at the time. Everybody is shouting market will go down. I am the only one. Said this is the time now you have to buy. Exactly the trap area they entered. From there Nifty rallied and finally it reached 20,000 points. I think from somewhere 16,000 or 15,000 points onwards. It was continuously moving after that. All the people got panic. Same situation again they are repeating. Reasons are different. At the time, people were saying, okay, there is some Ukraine-Russia war, everything, that way they said. All economy is gone. But our Indian companies are giving good results. Now also happening the same. Companies are giving good results. Now instead of Putin, now people are talking about Trump. That is the only difference. People names are changed, but the reasons are same. Somebody we have to blame when market is going down. Really when market is going up, even if whatever the decisions they take, it won't really bother market. At the time people won't say, okay, Trump took a decision, imposed tariffs, that's why market is going up. That way they won't say. They simply keep quiet. See, it's all how people are putting the stories. When market is down, they need a reason. And that reason should create some kind of panic among the traders. Why? That's why I said previously, I don't know how many of you remember, I kept a heading, why should I worry? When I know from where market will move up, we know we are in the monthly zone. We get a lot of short-term or maybe intraday opportunities we get until the supply consumes. See today what happened? Exactly from this area, this is the fine-tuned 5-minute zone. From this fine-tuned 5-minute zone, when we did this on 14th January, in this video only, we have drawn both these zones. That I added a more thick color for these zones, thickness. Everything in this video, you can see how I drawn these zones. Same thing is there in my chart. Now see today what happened. Market reached this zone, maybe some small buffer you need to add, that is okay. And they are such a power, because they are powerful order flows. Which order flows? PR set zone strategy. That's why at the time of explaining PR set zone strategy in lesson 28, I clearly mentioned the order flows in the PR set zone strategy are very powerful. And I shown you several examples in that video, PR set zone strategy. Nearly 7 or 8 stocks we analyzed it, or maybe even more. Every stock we listed, our software listed on the day, every stock, once prices reached to the PR set zone, like it pushed the market, pushed that stock price like anything. Same thing happened today. Maybe this rally may continue tomorrow, we never know. But at least today it gave very good profit. Maybe it may further continue until the next high liquidity zone in this area. Some high liquidity supply zone might be there. Till that area, definitely it might push. And today, it already gave you, see, from this zone, from here to here, it gave you 170 points today. How powerful the PR set zone. See, today market was, initially today morning, its market is like going down, but where it stopped? PR set zone. Again PR set zone pushed, once again came down, maybe the supply. Now how PR set zone consumed all the supply here. It just holded the prices. It didn't let the prices go down. Such a powerful order flow institutions kept here. After that, entire supply has been consumed and no more supply. Prices easily rallied and gave you 170 points move. From these 170 points, definitely, easily, you can capture a minimum of 100 points. You would have got a very good intraday profit today. If you listened to this video, Nifty monthly demand zone analysis video, few days back, same video what I posted on 14th January, once again I forwarded in our channel. The forwarded channel means I want you guys to listen once again. Because the analysis we did on 14th January is still valid even today. That's why I said, why should we worry as a supply demand zone traders when we know where the institutional order flows are there? Why should we worry? Why should we get panic when something is happening in the market? No need to do that, right? You've been seeing supply demand zones, how powerful they are. The only thing, if at all anything is lacking with you, probably some experience. That's it. Anyway, over a period of time, you will gain experience. Nobody will become experts on the day one. Nobody will create wonders on the day one. But definitely you will do one day in the coming days. When you learn all these concepts in a perfect manner, according to my training instructions, if you would have learned these concepts, definitely you will become perfect traders in the coming months. No doubt in that. Because some of you are already doing very good analysis. Some of you are already getting good profits. At least you people who took trades from this zone today and got profits, at least you mention in the comment section, I feel happy. I feel happy because we discussed this video on 14th January. At least I feel happy you people are sincerely learning the concepts. Do you know how much pain I will be having each time when I prepare a video? How much time I have to spend while recording the video? Do you know the cost involved for every hour I am spending for recording the videos? Do you know my human effort cost? Definitely, if the results are not there, it is a painful activity for me. If you people make use of these analysis videos and if you get good money, that is the biggest happiness for me, right? Of course, even more biggest happiness, you should do analysis on your own. These are all only for training purposes we did. But you should get convinced and you should convince with this analysis. Again, you should do the analysis on your own exactly the same way how I did. Then you should plan your trades. Why I don't talk exactly where to buy, what is our stop loss, what is our target. I just do learning point of view, I do analysis. I don't get into the trades because we are not SEBI registered. We can't do we should not give any recommendations. Why I leave my analysis up to the fine tuning the zones? Why I don't tell you where exactly you need to buy, where you need to keep your stop loss? Because all the concepts already you learned. You will be in a position to identify. If you did not learn, I am encouraging you to learn the concepts and then only get into the trades. But I am not suggesting exact your entry, stop loss, target. First of all, I am against that approach. Second thing, that only SEBI registered people only can give you the recommendations, not the other people. As a trainer, we can share our knowledge. That is okay. But we cannot give you the recommendations. It is your responsibility to analyze on your own, or you need to identify some SEBI registered financial advisors and from them you can take your recommendations if you have confidence on them. So this is the Nifty, how pierced zone strategies would have helped you, because we identified this based on the pierced zone strategy. That is what we discussed in the 75-minute zone when I have drawn this 75-minute zone. That's why on that day, this comment I added on that day, 14th January, I added this comment. Because I know one day prices will reach here. And I know that day it give you a good trade opportunity. And that day is today. It happened to be today. When it happened, after 1.5 months, we analyzed this chart, it happened. That means 1.5 months before, we predicted what kind of trade we are going to get. But we never know on that day. It is going to be on 3rd March. But we know in future, somewhere in the near future, the prices will be reaching up to that level. When institutions purposefully they've kept order flows, somehow they will make sure prices will be reaching up to that area. They make sure their order flows will get executed. Because institutions, they will always be doing trading, either long side as well as short side. Either side they do the trading. While they are trading at short side, they will ensure the prices will be pushed up to their long order flows. That way they make sure their long orders are executed, short orders are executed. That's why think like an institution. Then you will make a big money with the help of supply-demand zone price action. Just learning supply-demand zone is not enough. We should think like an institution. Because I think like an institution, I developed all these concepts, new concepts. Otherwise, how can I develop? I will be thinking maybe institutions might be thinking like that, or maybe institutions might be thinking like this. Different permutations and combinations I will analyze. If they are thinking like that, what kind of concept we have to develop? If they are thinking in some other direction, what kind of concept we have to develop? So that we can identify their order flows. That kind of thinking I developed. That way I developed many of the new concepts in supply-demand zone price action. I don't think this is not a hard thing. You just need to practice, or you should be having willingness. Yes, I think much better. Or I think much better than institutions. Some positive attitude if you develop like that. But remember, it should not become a overconfidence. That is the biggest thing happens to many people. Always we should be down to the earth. Then we never get overconfidence. Our goal is to think like an institution or think much better than institutions. That is the work. Why we wanted to be like this, so that we analyze the charts in much better. We analyze the right order flows. This is the best example. 14th January video is the best example. Whatever we analyzed 14th January, from there only orders are getting executed. No other place. In between, institutions may create a new order flows. Temporarily again, there also next time prices reaching, we get trade opportunities. These are the earlier order flows. Now when prices are moving up, they may create a new order flows. Short-term trade or intraday opportunities we will be getting. Anyway, those zones are high liquidity zones or not, our software will identify that. The NIFTY, Bank Nifty or other stocks supply demand zone chain, our software will identify them. Okay, let me stop here. This is about, I want you people to understand how important this NIFTY monthly zone is. How many opportunities it gave us so far. Several opportunities it has given. Everybody is getting panic when market is down, but we supply demand zone traders happily enjoying the long trades inside this. It looks like market is going down, but while going down, the moment it reach our institutional order flows, they are giving us short-term trade opportunities or intraday trade opportunities. That way we are making money. So this is about NIFTY. And what about the kind of trades we got today from HLQ zone? So one is Jindal Steel. Jindal Steel is a 75 minutes high liquidity zone. This is how it rally base rally. This rally base rally is fine-tuned with 15 minutes time frame. So in the recent price action, you see drop, 3 base candles and a rally candle. Drop base rally. And also here also you see we have a rally, we have 1, 2, 3, 4, 5 base candles and a rally. The 15-minute zone. Maybe drop, 1, 2, 3, 4, 5, 6 base candles and rally. That way I considered this 15-minute zone. So we have two order flows. Something happened to the computer. Okay. Two order flows. Now we have to fine tune these order flows with 5 minutes time frame. Let's go to the 5 minutes. See here, the 5 minutes is not really clear. We have a drop, base, again, this is also medium size. No, where is the leg out? There is no proper leg out. Same is the case here also. Here also we have a drop candle, rally candle, there is no base candle. When you have zones, such kind of zones, mostly zones will be violated, right? Yeah, sometimes when you won't be having clarity in 5 minutes, you can use 3-minute zones as an alternative to the 5 minutes. This is what you learned earlier. So go to the 3 minutes, then you see the real beauty here. See, now you see here you have a drop, base, rally and follow through candle. Drop, base, rally, follow through. Actually imbalance started. Maybe what we can do, you can keep drop to both the candles as part of the base, because this is a medium size candle. Then a rally candle. But what we did, because risk is high, when you include both, risk will be much higher. That's why we know from where imbalance is starting. Imbalance is getting started from this candle. That's why this is the area institutional order flow will be there. And similarly, this lower time frame zone horizon also we have identified a 3-minute zone. We have a 3 minutes high liquidity zone. We have a drop candle, base candle and a rally candle. Drop, base, rally. So this is the area holding the prices. Moved up and again moved up. This is acting as a high liquidity zone, and also this is the horizon. This is the horizon. 5 minutes, fine-tuned 5-minute zone is the horizon for this entire 75-minute zone. See the 75-minute candle, leg out candle. See how sharply it picked up the orders from this horizon, sharply moved up, and then a big move. Market further moved up. And finally now again prices are coming to this area. But before coming, here we have one more fine-tuned 3-minute zone here. So both these are all fine-tuned 3-minute zones instead of 5-minute zone. And today prices entered into this area and reached the 15 minutes target. 15 minutes target is a pierced zone, because structure is not very clear here. See here, rally base with hidden body. This is a drop candle. But this zone is already pierced. But many times still it is holding the prices. So that's why pierced zone, you already learned pierced zones can be used as a target zones. So that way this is the target zone. Actually I thought maybe here also, why can't we keep, see this candle is a leg out, but this candle is looking like a failed ERC. That's why I have some concern whether zone may not be. See, easily the zone is passed here. If anybody considered this could be a 15-minute zone, maybe you might have exited here. Still you would have got good profit. But what I am saying, if you carefully observe, maybe you may consider failed ERC candle. That way you can't draw 15 minutes. So the next valid 15-minute zone is here, because rally, clear base candle and with hidden body drop. But only problem is this zone is pierced zone, but holding the prices for several times. Because prices are getting closed inside the zone or not outside the zone. Within the zone or before the zone. Definitely not outside the zone. So this is holding. So that is the case, institutions may create a new order flows, anything are a little above or within this area. So because we have such kind of possibility is there, we always use pierced zones, could be as a target zones. So that way it reached the target. And when you got the trade at 12 o'clock, when it reached the target at 12:45. This is the 15 minutes. Let me go to the 5 minutes. You got the trade at 12 o'clock and it reached the target at again 12:45. That means almost in 45 minutes your trade is completed. And how much profit is Jindal Steel would has given you? Jindal Steel gave you 10,750 rupees profit, which is 9.7% ROI. Okay, next, another interesting one is Aurobindo Pharma. Very interesting analysis. The analysis itself is an interesting. Why? Because first time last 1.5 years we have seen such kind of fine tuning the zone. So everybody please listen. It's very interesting. Go to Aurobindo Pharma. This is a daily high liquidity demand zone. Let me go to the daily time frame. See, this is the daily zone. This is a rally candle our software identified. You may say this is a base candle. How can it is a rally candle? At the hidden body. First initially, for a moment I surprised. This is base. Then immediately I realized, see, sometimes the moment you see this is a drop base, that way you think, right? But software is perfect. It do the calculation. Sometimes our human eye will cheat us. But software, it can't be. It won't be having any emotions. It just do the calculations as per the algorithm. See, it is having a hidden. See, the previous candle close is here. At the hidden body, this complete candle is filled candle. So it is a medium size candle. Because it is a medium, software considered this as a leg-in, and then 2 base candles and a rally candle. See the beauty of our software. Especially the hidden zones concept you explained in lesson. I explained in lesson 9.3 and 9.4. They are effectively implemented in our software. There are so many other scripts people developed in TradingView. All those scripts, they don't recognize such kind of zones. It's not easy. Because the people are using a concept called boring candles given by TradingView. Based on that, they develop some scripts. TradingView won't take care of all these hidden zone related or hidden bodies concepts. That's why people miss those zones. But our software perfectly identifying. Moreover, see, this is a high liquidity. Institution knows what kind of tools we are using. That's why they always try to keep order flows that won't be captured by the tools. But luckily, we identified all the issues, how institutions are thinking in their mindsets. We developed this software. And today we are getting the results. Okay. Anyway, this is the rally, 2 base candles and a rally candle. Rally base rally. It is not a base candle. It is a rally candle with hidden body. Okay. So this daily zone is fine-tuned with 75 minutes time frame. Listen carefully. It's a very interesting. Maybe you might have did this analysis in case if you did not or if you missed something. See here you have a rally, you have a base candle, you have a rally candle. See where your base candle ends here. But if you look into the next 15-minute zone, very interesting. Let's go to the 15 minutes time frame. See here 15-minute zone is a little bigger than 75-minute zone. And another thing, 15-minute zone, a part is overlapped outside the 75-minute zone. Of course, it is within the daily zone. Maybe slightly outside the daily, but that is negligible, just ignore. This fine-tuned 15-minute zone is overlapped at the, see, that's why you clearly land up. Fine-tuning the zone need not be exactly inside the zone. It will sometimes exactly inside, sometimes overlap at the proximal line, sometimes overlap at the distal line. Anything is possible. Zone confluence. See, that is what you have seen. See, drop candle, you have 1, 2, 3, 4 base candles. Now a rally candle. Many times, such kind of zones may not be having good order flows in the lower time frame, many times. But sometimes, institutions keep excellent order flows. That is what happened today in this zone. Now go to the 5 minutes time frame. Now they kept 2 order flows in this area. Go to the 5 minutes time frame. But only thing is, we should make sure the order flows are within the 5 minutes order flows are within our high liquidity zone. They should not go outside the high liquidity zone. Maybe they overlap at the proximal line of the main high liquidity zone, daily high liquidity zone, or 75 minutes high liquidity zone. That is okay. But your entire zone should not sit outside the zone. See, we made sure our zone, fine-tuned 5-minute zone, is within the daily zone. See, this is your daily. So you have a fine-tuned zone. See here, you have a failed ERC candle. You have 3 base candles, and then you have a rally candle. Again here you have a base candle, leg candle. You have a base candle, and then you have a rally and follow through candles. See, nice imbalance here. See, follow through candle indicates it's a very good imbalance. It took place in that particular stock. See, earlier price is in a balanced way. Now the imbalance, the more follow through candles, more imbalance took place. More imbalance, strong institutional order flow. That's why we have given in our zone strength. If follow through candles are there, the zone might be having higher strength. Do you remember the concept you learned in phase 1 training, zone strength? The follow through candles, why we have given? The reason is that indicates the follow through candles indicates the imbalance. The imbalance is the clue for institutional order flow. If more imbalance, stronger the institutional order flow. So this is the area you have institutional order flow. So that way we are understanding there are multiple follow through candles. So we thought this is the area we have a very strong institutional order flow. And we have 2 order flows are here. And today what happened? Prices entered into that order flow. But your trade would have been executed only if you keep a small entry buffer. It need not be 1%, at least a half percent, not 1%, 0.1%. It need not be 0.1%. Within 0.1%, even 50%, if you would have kept the entry buffer, your trade would have been executed. The 50% area I have drawn. See, generally we keep 0.1%. Suppose any risk management point of view, more risk at the time, you will slightly reduce your entry buffer to manage the risk. But otherwise, see here today, it's like, it's almost, see, many times prices may not exactly go inside the zone. Just before the zone, they will started moving up. If you are keeping a very strict risk, and sometimes you will be missing the trades. Sometimes people see in the comment section they're keeping, I missed a trade just with 5 paisa. I missed a trade in just 10 paisa. Some of our members' comments you can see in some of the HLQ analysis videos. But okay, they missed the trade. Some pain will be there, but they did a good analysis at least. They should feel happy because they were able to perfectly did the analysis, even though they missed the trade. At least that way they should feel proud. Maybe financially they didn't get benefit, but knowledge point of view they should feel proud, even though they missed the trade. Okay, with small entry buffer you would have got. Anyway, I am checking the performance of our high liquidity zones. Performance point of view, always we prefer entry buffers. We consider our trade. If the entry buffer area, if price enters, it is a successful trade. And it reached the 15 minutes target zone. Here you have a 15 minute zone. Actually here 15 minutes is not a convincing. I am not really happy with this leg out, 15 minutes leg out. Next candle is okay. So the moment I went to 5 minutes, I saw 5 minutes high liquidity zone here. You see here? You have a leg in, 1, 2, 3 base candles, a drop candle, and this is the one holding, again rally base, a drop created. Again came, see, again price came, almost reached, again came down. Again here rally base drop created. And again prices came, sharply came down. That means this is the area holding the prices. So according to me, I thought initially this could be the area. Rally to base candle, medium size candle is also part of the base, and drop candle, I thought this could be the target. But here the moment I saw the 5 minutes high liquidity zone, this is the area you should keep your target. Of course, 15 minutes, this is not a convincing leg out candle, but 5 minutes, perfect. A large candle. 15 minutes, I'm in a dilemma whether to accept, looking like a medium size candle or within the medium, large size. So anyway, this is the 5 minutes high liquidity area. So this is the target. This itself a huge profit. It gave you a trade and sharply it moved up and reached here. And Jindal Steel, Aurobindo Pharma would have given you a maximum of 16,472 rupees profit up to this area. Maybe some of you, if you exit earlier, okay, at least you would have got decent profit. But this is an extraordinary profit, up to 14.9%. This is the performance of our software point of view. See, performance statistics are different, real statistics are different. In real statistics, your emotions will play, and because of your emotions, we exit the trade a little earlier. You feel, okay, this profit is a very good profit. Maybe if suddenly prices go down, I will be missing this much profit. And with that emotions, what you do? You take a decision. You go and just book the profit. But missions calculations point of view, performance calculations, we should remove all those emotions. Here, how our software generated, how powerful they are working, that is what we are evaluating. Every day, why I am doing this? To check how powerful our software recommendations. I mean, software is not recommending any trades. It is generating the zones. Maybe that is the right word. If I say recommendations again, the meaning will convey in a wrong way. Software is identifying the zones, high liquidity zones, the special algorithm we developed. How powerful those algorithms, that is what every day we are evaluating. So see how powerful it is. Why not price started moving from here? Why not before or why not after? Same is the case with NIFTY. Same is the case with Jindal Steel. Right? Okay, there is one more stopped out trade, Bajaj Finance. It's a very bad luck trade, I can say. Why? Because slightly below our stop buffer it went and then it recovered, moved up. But anyway, once it is stopped out, we have to accept. See the blue color line I have drawn? That is the stop buffer area. Below it went and see how sharply it moved up. Rarely it happens. It won't happen every time. Because every time, you know what people will do? When your trade is stopped out, you expect this kind of price action and you don't book the loss. But such kind of things happen once in a while. Out of maybe 20 situations, one situation it will happen like this. 19 times what will happen? After it is violated, prices will further go down, and if you don't book the profit, you will be getting big loss. Just out of 20, just because of one time this is happening, you are keeping 19 times in risk. So never do. Once it is stopped out, you have to accept. Okay, fine. How much money we are losing? Less than 2% only, right? If you calculate this stock, what is that? Bajaj Finance. Bajaj Finance, see here, only 1.1%. Even though we accept maximum 2%, this is only given you 1.1 with stop buffer. Calculated with stop buffers. Okay, first of all, how our software identified? This is a 75 minutes high liquidity zone. Our software identified this as a rally, 1, 2, 3, 4 base candles and a rally candle with pro gap. Okay, this zone we fine-tuned with 15 minutes time frame. In the 15 minutes time frame, I am not happy with these candles. The reason is they are large candles. See, the moment you hide, these are the large candles. These are the medium size candles. So you can't draw a zone, you can't keep them as a base candles. That's why here I have seen a rally, 1, 2, 3 base candles and a rally candle, and this is the origin. This is the 15 minutes origin to this 75-minute zone. Why origin? Because this is at the distal line, overlapped at the distal line. Picked up the orders from this origin and then prices started moving up. But you can't directly take trade in the 15 minutes origin. You need to fine tune with 5 minutes time frame. Go to the 5 minutes time frame. In the 5 minutes time frame, here you have a drop candle, base candle, medium size candle, and then you can keep follow through candles here. But what I did here, this up to this area medium size candle I didn't, because I recognize, based on my experience, I can clearly say imbalance started from this candle. See how the imbalance continued here. That's why I always think from the imbalance point of view also. From where the origin for the imbalance. This is the candle origin. And then follow through and then follow. That's why I have drawn the zone up to this area. This is the way how I managed my risk. Risk management. See, such kind of skill you will be developing in the coming days. And this is the stop buffer. Many times we are identifying our trades like that. So this kind of understanding you will build in the coming days, because many times I am explaining in the everyday HLQ analysis videos, whenever we see such kind of imbalances, why again and again I am repeating those points, so that you will learn from my experience. You will also become a good trader. You will also manage the risk in a better way, much better way than the other people who learn supply demand zones. I want you people should be the best people in the market. I want you to be the best supply demand zone traders in the market. That's why every point I know I am sharing with you. Okay. So this is the way effectively we managed the risk. This is the fine tune. See, exactly from this area it picked up the orders, and then the whole, again second time also it picked up the orders, and now leg out formation has been completed. This is also acting as a high liquidity zone. Why? How can I say? See, here again drop base rally happened here. Maybe drop 1, 2, 3, 4, 5 base candles rally happened again by picking the orders from this origin. And today, unfortunately, this zone is violated. You may say morning 9:15 candle this violation might have happened. No. It happened 9:16. If it is 9:15 candle, it would have happened. We would not have considered this as our stopped out. It won't affect our performance. If 9:16 onwards, if prices are violating, it is valid. Go to 1 minute, you will get clarity. This is 9:15 candle. And this is 9:16 candle. And in 9:16 candle, see our stop loss is hit here. So definitely you have to exit your trade. Maybe it looks like it recovered and gave a very good move. Of course, we missed this opportunity. That's why I said this is a bad luck related trade. Okay, after that, we can't focus on this because already this zone is PRs. You can't plan again second trade here. It looks like second time perfectly it worked and moved again, because already it is gone prices. No more this zone is valid for us for planning our trades in the intraday. As per the HLQ zone strategy, you may use other strategies and you may find trade opportunities. But HLQ zone strategy, once the zone is pierced, after that you can't plan any trades in that. Before piercing, if your trade is within the stop buffer, you will hold. Either it reaches 15 minutes target or 1:3 RR, depending on your risk management or other your observations on the live market, you take a decision where to book the profits, because already you are in the trade. But once the zone is pierced, next time you can't plan any trades in this zone. This zone is gone. If at all anything, pierced zone strategies comes into the picture. If any, as per those pierced zone strategies, if you identify any order flows and next time in the retracement, that way you can plan the trade, nothing wrong in that. But not HLQ zone strategy. HLQ zone strategy is special because we are expecting 80% success rate. Okay, this is Bajaj Finance. That's it. These are the only 3 trades we got from our HLQ zone. So remaining, let me quickly go through. This Aarti Industries is a daily. And this is a very old zone, 2020 zone. We didn't plan any trade. Even price also did not enter into the zone today. Next one is AGL, Adani Total Gas. This is also 2023 zone. That's why we didn't plan. I just fine-tuned the zone up to 75 minutes. Within this daily zone. See, this is a 2023. November 2023. You won't get access to 5 minutes data. We can't fine tune up to 5 minutes. I just ignored this stock. But see, prices came close to the fine tuned 75 minute zone and then again started moving. Anyway, we don't know. We don't have any 5 minute zones here. Next one is Aurobindo Pharma. Already we discussed. We got a good profit from this zone. Next one is Concur. Concur is also a old zone. When? April 2023. That is the reason why I left this stock. But today, see, prices came to the zone and moved. Maybe next time, if you can draw a 75 minute zone, fine tune. It is having any order flows at 5 minutes level. In the retracement, you can plan, but not today. Next one is Nestle. See, this is the one we already drawn in the, I think, last session. I left this because 15 minute structure is not good. But today, you see, prices came and moved up. Maybe institutions might have created a new 15 minute structure. Anything they created, let's check. No, here also there is a pivot is there. Maybe any 5 minute zone they created, yes. A drop base rally and they pushed the market. But why we didn't plan? Because 15 minute structure was not comfortable in this zone. That's why we thought this zone will violate. But why the zone is, see, all these candles, not really convenient. But why it is worked? It's because institutions created a drop base rally and pushed it. Next time we can't plan. If you plan in this area, this is an aggressive trade setup. Any price action clues you can plan. But at present we are not seeing any proper price action clues here. Or maybe any 1 minute high liquidity zone is there. That way you can check. But that is not possible. 1 minute data you can't. Can you access? This is 29th January, right? Maybe 1 minute data access will be there. Maybe you can look into that. Any 1 minute zone is there that is holding the prices. Or any 5 minute zone. Even 5 minute zone is also holding. We can confirm it could be a high liquidity because LOTL zone is created here. See here. Let's check if there is any 5 minute zone. Next time it is useful to us. In this area, see, I have drawn reference purpose. In this area, any 5 minute zone is there. Next time we can plan in this area. Oh, see here. You have a rally candle. You have base candle, medium size like part of the zone. You have a rally. This is the area. A 5 minute zone is there. This is not a fine-tuned zone. See, this is not a fine-tuned zone, right? This is a rally base rally. And today prices entered and again a drop base rally is created. Maybe it may give you another trade opportunity if it is a high liquidity. See, LOTL is not the 100% confirmation, it is a high liquidity. We are assuming it could be a high liquidity because of LOTL, new order flow will be added into this zone. So some more orders are added into this area. That way it may give a better trade up. That way it could be a high liquidity. That way we are predicting. Our prediction is only 80% confidence level, not 100% confidence level. See, manual way of identifying high liquidity zone, 100% confidence. Only 80% confidence. We are taking a little 20% extra risk and then we are planning our trades. If the risk is within the limit, okay, if luck is there, we get a good trade, right? So that's why we are, many times our assumption is correct, many times. So that's why we are making manual way of identifying LOTL is there, maybe it could be. See, there are situations we have seen, there are LOTL zones, they are violated after that. Previously also we observed few zones. But we are taking extra risk. Because many times such kind of zones are working. They are giving better trades. At least decent profits they are giving. Or decent success rate. Okay. So maybe this is 5-minute zone could be a high liquidity zone. But today we can't plan a trade here because you don't have any confirmation until today's price action. So that's why we didn't plan any trade from this Nestle. If our supply demand zone chain might have identified this as a high liquidity, definitely we could have taken a trade. So generally, I'm not, maybe you can refer, I am not referring supply demand zone chain every time because many of you haven't used with that supply demand zone. Only Nifty Bank Nifty are using. Okay, now we started that service. Maybe some of you will be using that. But unfortunately it's a paid service. So I don't want you people, for your learning point of view, I don't want you depend on supply demand zone chain. See, I should also think from your perspective also. Many of you can't afford to buy, but you want to learn the subject. When you want to learn the subject, I can't completely make you people do analysis depending on NeoStock software. So that's why I'm trying to eliminate as much as possible while I'm analyzing the stocks. See, so the daily 75-minute zones, there is no other choice. We have to depend on that because that strategy is giving great success. But except that remaining areas, why I am doing manual analysis so that maximum learning will be there. That is one thing. Second, manual advantage, the advantage is we can compromise and draw fine-tuned zones. But mission level, it can't compromise. That's why sometimes mission will be missing the opportunities. Because it won't compromise. It is very strict. But human point of view, in an intelligent way, we recognize that. That way we get a trade opportunity. But mission would not have given you that opportunity for you. Mission don't identify compromising the zone. Because mission never knows how to compromise. Because any mission works based on the rules. Compromising is depending on how your mind acceptance. That's it, simple. You should not give control to mission for this acceptance, otherwise a lot of dangerous things will happen. Okay, this is Nestle, and the next one, anything? Yeah, last one is Hero Motors. Hero Motors is a 75-minute supply zone, high liquidity supply zone. Software identified this as a drop, 1, 2, 3, 4 base candles and a drop candle, follow through candles. And this one, see, this is also, see, part of the zone came outside the zone. Part, that is acceptable. So 15-minute zone, you see, failed ERC. But actually, if you add the hidden body, it is a drop candle. Add the hidden body, drop, base, drop. Drop, base, drop. And this one I fine-tuned with 5 minutes time frame. First, this is a 75-minute zone. Did I? Yeah, I already told you, right? Yeah, fine. The 15 minutes, this drop, base, drop. This again fine-tuned with 5 minutes time frame. See, 5 minutes time frame. You have again a drop. You have a base candle. You have a drop candle. Look into this. This is part inside the zone, part outside the zone. If the risk is within your accepted level, you can keep this zone. If the risk is not within your accepted level, you adjust your entry within the daily zone. But sometimes you may miss the trade opportunity, right? So that's why, say if the risk is more beyond 2%, anyway you can't take the trade. That's why you adjust your entry exactly at the proximal line of your 75 minutes high liquidity zone. How to adjust? Simple. You drag and place your mouse at the proximal line. That's it. So this is going to be your entry. But sometimes what happens, price reach and again. See, today price came very close. But after that it came. Anyway, it is morning 9:15, 1 minute candle. the big move happened, so I just ignored it. Prices came close, it looks like, came very close. But anyway, it is not a trade. Even if it is close, even if you add entry buffer also, this won't be executed. This is below your entry buffer. Even entry buffer supported also, you would not have accepted. This could have been a 915 candle. So that way also. Anyway, first of all, it is not entered into the entry buffer. So that's why there is no trade from this zone. So this is what happened with our high liquidity zones, and also NIFTY, you should not forget. See, the effort I put on NIFTY monthly analysis a month back, so they are giving results when, see, only thing is, you won't get opportunities every day, right? Until you get opportunity, you have to patiently wait. The day you get the opportunity, capture that opportunity. Then what we do the remaining days, look into the other stocks. So many other stocks are there. Don't expect everyday trades from NIFTY. Sometimes you may not get trades. Okay, you may say some people trade only NIFTY, Bank Nifty then. Yeah, because they have limited time resources. They can't spend so much time on analysis of other stocks. Maybe they are busy with other work. So that's why they are depending only on NIFTY and Bank Nifty. So you can't compare yourself with the other people who are having less time to focusing only one or two stocks or one or two indices. Because today we have software. Software is exploring all the 200 stocks and giving you the 3 or 4 stocks. Manually it is not possible, right? That's why olden days people depended on only NIFTY, Bank Nifty. That is one reason. Second reason is the people, working people, they are busy with their work. They can't analyze so many stocks. That's why they selected only NIFTY, Bank Nifty. But you are a full-time trader and you have time from morning to evening, then you should not limit yourself to only NIFTY, Bank Nifty. You should focus on all the stocks. You should focus on, because you got plenty of time to analyze the stocks. The day you don't get trade opportunity in NIFTY, the other day you get trade opportunity in some other stock. Why I am focusing only HLQ zones is because I have to support my strategy as much as so much of data I have to analyze. More and more data I analyze, more and more accurate results I get. See, last month we got only 75% success rate, right? This month also similar kind of success rate we get, but I will analyze in the next video. The performance the monthly statistics I will publish in the next video. Because the last month onwards I am making separate video. I am not mixing with HLQ zone analysis videos. Monthly statistics will be in a separate video. Okay, this is about today's HLQ zone analysis video. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.